everybody. Thank you for joining us for Inside North Carolina Real Estate once again. So, we wanted to help you guys out as much as we could with all your real estate questions and concerns. And we wanted to start because we had a lot of questions and interactions from last month's video about insurance and everything involved with insurance. So, I asked my preferred insurance agent, Jenny Castelli with Goose Head, to join us on our call this week to kind of answer some questions, give us a little insight on what she's seeing as far as insurance. But first, I'd like to introduce everybody. I'm Terrence Boykin with Boykin Realty from Raleigh, North Carolina. Next, we have
Zeke Farrington here in the Charlotte region with Zane Real Estate Advisors, brokered by Compass.
All right, and I'm Donald Smith with Broker Smith at North Group here in Wilmington, North Carolina.
Hi, yes, I'm Jenny Castelli with Goose Head Insurance, independent insurance agent here in Garner, North Carolina. Really excited to be with you guys today. And this year, one of the top things people have been asking me about is flood insurance. So you'll see, obviously, that's my information. If you guys want to get in touch with me for any further questions or anything that you have, that right there, my telephone number and email, that's usually the easiest way to get a hold of me. But of course, with all these natural disasters we've been seeing, people have been worried about their homes and even their automobiles when it comes to flood insurance. So this year, a lot of people have been asking me about flood insurance. They've had a lot of questions in regards to their homes and what zone they're in and the different natural disasters that they're seeing come through. So I wanted to just first, right off the top, let you guys know that it's very important to understand the definition of a flood, because even though we have the National Flood Insurance Program and we have private flood carriers that Goosehead has, everybody uses the same definition of a flood. So if you have a buyer who is concerned about a little bit of rain that gets in the crawl space, that's not going to be considered a flood. As you see on the screen there, a flood is actually a natural disaster that affects 2 or more acres of land or a minimum of 2 properties in the same neighborhood. And of course, that flood can come from, Donald, you're probably seeing it come from the beach and the waves that come in, or we've got that more runoff that people are concerned about. It's not just a little bit in their crawl space, it's a whole bunch of runoff that suddenly hits. Or like we saw in Hurricane Helene, we've got mud flow. Mud flow is when you see rivers of mud over what's usually dry land. And that is not covered on your homeowner's insurance. And then, of course, also like we saw in Hurricane Helene, we can have a collapse. In that case, it was a dam breaking, and that can produce a flood. But it's got to be a massive declared natural disaster, even if you have a private flood insurance policy. And again, just because it's never covered on your home insurance, that's why we want to make sure that our clients are educated in it, because it can still happen in every single state. No matter what zone you are in, you can still be the victim of a flood. In fact, it's funny to find out that it is actually the #1 natural disaster in the United States, but we're just not, we don't talk about it as much. And this year it has become a hot topic. We go back to 2017 with Hurricane Harvey, and 80% of the flooded homes there did not have flood insurance. This means that when they bought the home, they were not in a zone where their mortgage required it. And it's really easy for people to say, hey, it's not required, I'm not going to get it. But it's really important. As you see, 80% of the flooded homes ended up with no coverage in that situation. And then if you are in one of the zones where they say, hey, flood insurance is required, you're at high risk, you're actually more likely to have a flood than you are a house fire. And again, that's just not the way we're wired to think about losses and insurance claims that happen to us. We immediately think the fire is more likely no matter where we are, just because that's what we've been kind of trained in. And then, of course, just like I was saying, we've got this National Flood Insurance Program that we've all been familiarized with. It's ran by FEMA. And then we have the other option of having private flood insurance. But FEMA still controls all of the zones. So you'll see there, you've got your low risk zones, you've got your high risk zones. But still, 25% of all of the flood claims that are filed happen in that zone X, which is the absolute lowest risk according to these maps. And fun fact, FEMA is projected to be about 10 years behind when it comes to these maps. So even if you're like, oh, this is the zone that I'm in, it's really the responsibility of the homeowner to take a look around, see what might have changed, and say, hey, you know what? Actually, I think that I am potentially at a risk for this. Let me get this insurance.
Jenny, I want to interrupt you for 1 second, please. I want to make sure because something you said sounded huge to me. Did you say that 80% of the homes affected by flood weren't insured for flood?
That was in Hurricane Harvey. So that specific hurricane, 80% of the people who had flood losses had no flood insurance, which means it was not required by their mortgage for them to carry it. So they opted not to. But hindsight, obviously, it would have been really good for them to have it at that
Got it.
time. And now the National Flood Insurance Program puts limitations, which I'll just go ahead and jump because you've got private insurers where we're able to make a better policy for you. Because when you're with the National Flood Insurance Program, they are just concerned with your dwelling and your personal contents. And you can get replacement costs for your dwelling, but your personal contents is always actual cash value. If we take you to a private carrier, we can get that replacement cost on your personal property as well. And I know you guys are familiar with replacement costs because that's what all of the lenders require when you're going into closing. They want a policy that shows replacement costs. So in the event of flood, we can get that for them as well. The other thing is that the National Flood Insurance Program caps everything at $250,000. And then you would have to purchase excess past that if you want it. But if we go ahead and jump you just to a private flood insurance, you get to do exactly what your home is valued at. So when you have a policy through the National Flood Insurance Program, they cap everything at $250,000. So even if you have a $500,000 house, you are going to be capped at $250,000 worth of coverage. But with a private carrier, we can actually increase that. Also, the national program does not include any detached garages or sheds or swimming pools, anything other structures on your policy. So we can add that. We can really make a whole homeowners policy with the private carriers for flood and mud flow. So if you've got a client that's in an area like that, I would really encourage them to take a look into a private flood insurance.
A couple things I didn't realize on that you just presented was those extra items like that detached garage. I've got some clients that's their space where they've done a lot of stuff in that detached garage, and to know that that might not be covered is something. And then that replacement value versus actual value is huge because I've got a lot of clients that have been in houses for 20, 30 years, and replacement value versus what that thing is actually worth are completely different and could catch a lot of people off guard. I think that's really something our clients need to talk to their insurance providers. And I know, when you're going through a transaction and you're getting all these recommendations for different providers, and you just pick one and just pick the cheapest one because that makes everything work. These are some things you really need to think about.
Absolutely. And the best example is a roof, right? You've got a brand new roof versus like a 20-year roof. If you've got replacement cost, they're going to give you exactly what it costs to replace that roof. If you have actual cash value, they're going to come out and they're going to say, hey, this roof's 20 years old. We'll give you, $3,000. And then you have to come up with the rest of it to actually get it replaced. So yeah, replacement cost and actual cash value are some key words to pay attention to.
I'll chime in here with this. Back in 2019, we were victims of Hurricane Florence, and we came from the top down. We had something that scalped our roof, and we had to go back in and get an actual copy of our policy to see that our agent actually did put in the replacement cost rider attached to it. And I'll tell you, it was the difference from us being going belly up and us being able to get made whole to be able to put things back on track. And it's a huge piece of it to make sure that you are getting the cost replacement versus getting the actual cost. For us, that was a lifesaver.
Yeah, absolutely. Very, very important. Any other questions on the extra coverages that a private flood policy can put on there?
You have maximum $250,000. That's no matter what. That's if the house was worth $400,000. And so on the interior, they had all types of electronics that may be worth another 60,000. You're saying they would still only get 250,000?
Right. Yeah. The National Flood Insurance Program has a cap. And so that's why it's so great to have these private carriers step in and be able to give us like a real policy for the home.
Got
So,
it.
yeah. And then if you guys do run into clients who they're in a zone where they are being required to have flood insurance, get them or have them get an elevation certificate. Okay. I actually had a client, he was in a new construction neighborhood, and that the land that they were building that on was in a required flood zone. But because his lot was in a specific place in the neighborhood that was least likely to be affected, and based on the elevation certificate that he had, he actually saved $1,000 on his particular policy. So you can still, lower the premium with an elevation certificate. So, but you would have to get it from a certified engineer. Oh,
I've been in the business for 9 years and can't tell you how many classes and different continuing educations I take every year and have never heard that or
yeah.
don't remember hearing it if I did hear it.
It's definitely, it gives very specific information to the way that that land is sloped and, how high it is based on, compared to the base level and all that. So it can be a key factor. So if you do have somebody and they're kind of freaking out, like, oh my gosh, I'm gonna have to have this additional insurance, have them get this done so that they can save as much as possible.
We run into that a lot at the beach with the elevation certificates, and I'll tell you, on the buy side of it, a savvy buyer agent will build that into it to where the seller will actually have that performed as part of the due diligence.
Oh, there you go. That's a good idea.
I can now classify myself as a savvy buyer's agent since I know this.
There you go. Okay, and then just of course, so if your client is closing on a house, their waiting period is waived. But as we've talked about before, insurance, they're ultimately investors, right? So they have to protect their money too. And so there's a waiting period to prevent people from saying, oh, they just announced a hurricane, let me hop on board with flood insurance. And then when it's gone, they just cancel, right? Because that's not, as we think of businesses and investors, that's not a smart investment for those companies. So they put these waiting periods in there so that like the National Flood Program requires 30 days. So if you ask for it today, it will not be in effect for 30 days. But some of our private carriers, like my best one, can actually get it in 10 days. So there are ways to, again, with the private sphere, get things done quicker. But all of that, whether it's private or through the National Flooding Program, is waived if you are closing on a home. So even if you're not in, like if you're in zone X and it's not mandatory, it still might be a good idea to go ahead and jump on it so that you have it from day one that you're in the house. And then the other thing is if they ever get around to those map revisions, they will let you start next day coverage. So if your area gets revised, they'll let you change that. Now, of course, the other thing is flood cancellations. They have to pay, so this would affect your closing if they have to pay for that flood insurance up front and it's considered a fully earned policy and not the kind of policy that they can just check out and get a refund for unless they sell the home, the zone determination is changed, or it is no longer required by their mortgagee. But in that case, they paid off their mortgage and your client probably still wants to hang on to it because if you're in that flood zone and then everything's on you, you want to have that insurance in place. Does that make sense?
Yeah,
Yeah.
Yes, it
absolutely.
does.
Okay. And then, of course, we have people just want to say, oh, you know what, the government will pay. Well, we all know, like, from what happened with Hurricane Helene, the word on the street was people got like $750 because they're really paying you survival. They want you to have water and food and just survive. And they make loans available for you, but the government is not going to rebuild your home. So we can't rely on that. We have to get these insurance policies. The insurance policy will rebuild your home. The government is just going to do disaster aid, which is not rebuilding your house. So, and you'll see there, some of those loans have like 10% rates on there. So, and then I just put this one at the end here just because I get this question a lot when I'm doing policies. Oh, if there's a fire, my car's in the garage. No, your automobile is never covered under your homeowner's policy. So if you're concerned about flood in your area, you're going to want to make sure to hang on to comprehensive coverage on your auto policy. So even if your car is paid off and you're like, oh, I don't have to carry comprehensive anymore. If you're concerned about flood or fire, something like that at your house, you're going to want to make sure you've got that comprehensive coverage. And just check in with your agent. Make sure you've got all your recreational vehicles covered and that you understand what's going to be replaced by your homeowners versus what's replaced by an auto policy or a personal property policy. So that is all. That's just what I put together for you. I hope that answers some of your flood questions. Did you guys have anything else that I could address for you?
With the flood insurance, especially on the coast, we end up with the aftermath of it with the mold. And usually these regular homeowners policy has like a $5,000 cutoff on mold remediation. Does the flood policy add any additional mold coverage?
So I believe that you have to have an endorsement, even on your homeowners. That's an endorsement that has to be added for mold. So mold is like a big with insurance unless there is an endorsement. And that's typically added to the homeowner's policy because it's something that sometimes, like you said, can happen after the fact. It's like, oh, this is from that loss, but it's noticed now because it, obviously takes a little while to get there. So you would want to make sure that's on your homeowner's policy.
Will you please explain? We've got a lot of first-time home buyers and people who are thinking about buying a house. When you say an endorsement, what does that mean?
It's not automatically included. So when you just get a general home quote, it's not one of the standard coverages. Like obviously dwelling is standard, other coverages is standard. There's certain things that you see on every policy. An endorsement is an elected addition, something that you decided to put on there. For example, water backup coverage. If you are connected to the city sewer, you are going to want to make sure that you've got water backup coverage, and that is actually an endorsement that your agent has to add to the policy. This would be like sewage comes up into your house, it's absolutely disgusting, damages your floors. Heaven forbid it gets out of the bathroom and gets to your furniture or something. You want to make sure you've got an endorsement on your policy that covers that because first off, you want your home repaired, but second, if it's not a covered loss, you can't even dip into your loss of use coverage. Now, loss of use coverage is standard, and that's what you use when you're displaced. So I have a house fire. I can't live in my home because they're rebuilding it. I use my loss of use coverage. I go get a hotel, right? And that loss of use coverage helps me cover those expenses that I now have. But say you didn't have a water backup endorsement on your policy and the sewage comes up, you're just footing the bill because the loss of use coverage isn't going to kick in because it's not a covered loss if you didn't have that chosen on your policy, that option. I guess option's another word for it.
One of the things we learned when we went through our loss in 2019 was that the declaration page gave us our limitations, but we had to order an actual copy of the policy and wait for the home office to send it to us. Do you recommend that those that are insured request an actual copy of their policy so that they know what's in it?
So they should, when you first get your policy, the companies are mandated to send you an entire packet. So I know at some point it was probably 15 years ago or something like that, right? So you definitely, yes, you want to keep a current copy. When you get your homeowners initially, look over that big packet that you receive, and because it will go through even like the added endorsements and exactly kind of all the legal jargon should that day come that you need to use it. But they should make that available to you even in online portals sometimes.
Gotcha. I got one last question because you answered most of the ones that I had. Can you talk to the point for investors on rental property and the endorsements that they need to have their rental property covered?
So you're asking, so they've purchased a property and they've got like a long-term tenant living in it. Is that the scenario we're looking at here? Or?
So that they're going to use it for a business or for a return, and they're not living in it, but they're renting it out, whether it be an Airbnb or a long-term rental. The endorsements that they need on their homeowner's policy to make sure that it stays covered underneath the policy itself.
Okay, so you're looking, so someone's got like a room in their house that they've turned into an Airbnb. So it's attached to the house they're living in. Is that the scenario? Sorry, Donald, I just want to make sure because there's two different things though.
So our preferred agent will tell our clients that if we're going to use it as an investment and they're going to rent it out, that they need an investment or a rental endorsement on it to make sure it stays underneath the confines of that homeowner's policy. So because it is being used as a business versus it being a residence.
So if you are renting out the entire house or
Correct.
apartment and not living in it, like you do not live there, you should have an entirely separate rental dwelling policy. And then so some people call it a landlord policy, right? So you're covering the dwelling and, just like you would if it was your house. And then usually your personal property coverage is a lot less. And then we do the same things like water backup coverage, just as if it was a house. We just do not cover furniture unless you furnish the rental, then we can throw that in. But if you're just letting somebody move in, then they need to get their own renter's policy to cover all of their personal belongings and so that they have liability. So if they burn your house down, their policy rebuilds it instead of yours. Now, it's really important too that you guys do let them know whether it's short term or long term. There are some insurance carriers that will not do short term, right? And that goes from, the Airbnb weekends to a 6-month lease that you let somebody have. If it's not 12 months long, it's not considered a long term rental. So you do want to make sure you specify that. Now, in the case that you live at the residence, then and you say, hey, I've got this little side apartment or I've got this mother-in-law house or something like that I'm renting out, that's where you look into Airbnb endorsements on your homeowners to make sure that you've got coverage for the fact that a portion of your house is being rented out. And again, there's some carriers that will go for that, and then there's some carriers that won't necessarily go for that. So that's another thing about having options of different carriers to look through. Donald, does that answer your question?
Yes, ma'am.
Something you said on there, Jenny, for everybody out there. I know as investors, we're always trying to save as much money as we can. Oftentimes we think, well, we're going to do this, and if something happens, we can figure it out down the road. Don't play this game with the insurance. If you've got a short, especially like a short-term rental or just a regular rental, get the proper insurance up front. It's going to save you a lot of trouble.
Yep.
Absolutely. Because, like we always say, the insurance policy is actually a contract between you and the insurance company. So, I mean, love them or hate them, the minute something happens, what they're going to do, they're going to look at the contract and say, hey, are we actually liable for this? Like, is this actually our responsibility? And if you have the wrong policy or you've got a short term renter in there and you've got a long term rental policy, they're going to be like, hey, this wasn't the contract we made. We didn't agree to cover that. And they're going to say, no coverage and say the contract is void. So you really want to be as honest and upfront and just look at every nook and cranny with your agent so that we make sure you've got true protection.
Vic, do you have anything?
No, I mean, it's really great information for me. It's in terms of the flood. I know Donald would probably face it more so than we would here in Charlotte. But still, I guess with the overflow of rain that comes from the hurricanes and stuff, it's really nice to know, what constitutes a flood, even here in that case. So, I feel like I'm kind of smart now.
Now, and that's why I wanted to talk about flood, because North Carolina is one of those states that, it could flood anywhere in the state at almost any time. And we like to, well, not we like to, but we think that it's going to be a coastal issue, a Wilmington issue, you know, down that way. But it happens here. And I'm always watching whenever a hurricane comes through, what's going to happen in Raleigh and different parts in Charlotte. It comes through Charlotte. So it's a big thing. Jenny, last question I had, you mentioned endorsements, and I'm kind of thinking about that. Just for our average everyday homeowner, what are the, say, top 3 endorsements that you recommend homeowners look at? And I'm asking this question because I also recommend that homeowners review your insurance every year and reach out to different companies to get new quotes. And these are things you need to be asking about. I recommend you ask about.
Yeah, absolutely. Well, the number one is that water backup because it's just something that, again, kind of like flood, we don't think about it. And I think we assume, if something like that happened, surely it would be covered, right? And I think that's something that could sneak up on somebody. So always want to make sure you've got your water backup in place. Number two, I would make sure that you've got replacement cost on your personal property, right? We kind of talked about that with flood. It's the same with your homeowners. It's pretty typical now. Like every quote I run is the dwelling is replacement cost, but a lot of times I have to check a box to get you replacement costs, and checking the box is adding the endorsement. I have to add that to make sure that your personal property gets replacement cost as well. Because you have that fire and you've got that awesome TV, but we all know everything keeps changing. And, so you want that big screen TV back. Well, it's going to be more to replace it than the one that's currently hanging on your wall, right? So you want that replacement cost for your personal property. Those are probably the two most important ones that I make sure to add for everybody. And then it's really just looking at, oh, well, this is kind of it's not an endorsement. I don't know, Terrence, I might go off a little bit here, but it's important to me. So a lot of people will do what's called a rider. It's kind of the same thing as an endorsement, right? But you're saying, hey, I've got this valuable jewelry, and homeowners policies cap jewelry at $1,500. And you're like, well, wait, I've got all these family heirlooms. I want to add a rider for my jewelry. Well, when you add it to your homeowners that way, you're only getting covered for the same thing your home is covered for. So that's like basically wind, hail, fire, and theft, right? Those are the big ones. There's a bunch of other things in there, but what you really want for that precious item is personal articles policy, which is not an added endorsement or an added rider to your homeowners. It is a completely separate policy. Two reasons you want to do that. First off, like you get awesome coverage. Like, for example, this ring that I have, if a stone falls out of it, my jewelry policy will replace it. My homeowners won't replace that stone. If I drop this down the sink or if I drop it into the ocean while I'm at the beach, my jewelry policy will replace it. My homeowners will not. Even if I put a rider on my homeowner's policy, that coverage is not there. So your jewelry policy will have it's called all perils. So no matter what happens to it, it's covered, right? And then on top of that, you don't want frivolous claims on your homeowners, right? I had a guy who came to me, he had 2 jewelry claims and then his house got struck by lightning and he got dropped from his insurance because all of a sudden he had 3 claims. And you guys have probably had that buyer who you are dying to close, but they can't qualify because of this laundry list of losses they have. So we want to keep frivolous claims off of your loss history report. And a way to do that is something like the jewelry, just take it away. Give it its own policy. This ring cost me $30 a year to cover. $30 a year. And I can keep it off my loss history report with my homeowners and I can get better coverage for it. So if you've got valuables like that, that's what I would. So it's kind of opposite. Instead of adding it, I would say get it its own policy. So
I absolutely promise, Jenny, this is the last thing. It's going to lead us into our Christmas and December conversation. We were talking the other day about e-bikes and e-scooters. And I know with Christmas coming up, those are going to be a lot of gifts. What advice do you have for people around e-bikes and e-scooters?
So the thing that happens with the e-bikes is that there are the ones that are just fun that you would let your kid on. It's, doesn't go too fast. It's just a little bit of extra power, not a big deal, right? That still falls into a category of a bike. But we know that there are some $5,000 e-bikes out there. I mean, it can get real expensive and very serious of a hobby for people. If you've got an e-bike that goes over 25 miles an hour, that's when we need to start really looking at it, because when your house goes up in smoke and you're writing it down as all of your personal property you lost, they're going to look at it and they're going to say, hey, that was a motorized, recreational vehicle. That falls into a different category. We're not going to replace that for you out of your personal property that's on your classic homeowners. So that's why you want to make sure when you buy a toy like that, is there a policy out there that would better cover it for you, especially if you make that kind of investment.
Thank you for being on the call with us today, Jenny. We've got your information on the screen if anybody wants to reach out. And I highly, 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 highly recommend you reach out to Jenny. just to get some ideas from her and maybe get a requote to see what's out there. Thanks for being on with us today, Jenny.
It's good
Yes,
information.
absolutely.
Thank you.
Thank you for having me.